In the equity quadrant, taking a look at the March S&P futures, which is in rally mode, today's move higher represents a reversal of the price action of the last 5.5 days, which resulted in a decent drop. The low today, 58.7950, was only down 5 basis points. We basically had a straight up day today. The high 6,000 even, that was up 2%. And with a little bit of time left in the session, we're still up 1.96%. So we are likely, I'm going to say we're going to close on the highs today. When you look at this kind of price action, it's a very strong recovery from some of the recent downward price action we've seen, but certainly not enough to say that we're above all the resistance that still sits here from the recent 6 or 7 day sell-off. Bank stocks reported earnings this morning, and 5 stocks that reported earnings represent 2.8% of the S&P 500 market cap. These stocks are JP Morgan, Goldman Sachs, Wells Fargo, Citigroup, and Bank of New York Mellon. Now, while that's not a huge percentage of a market cap weighted index, which the S&P 500 is, all of these stocks are up between 2.2% and 7.7%. Citi and Wells Fargo are both up over 7%. Even companies like Bank of America and Morgan Stanley that did not report earnings are higher between 3 and 5% on the back of today's performance of the other stocks that I mentioned. So it looks like at least big bank earnings is expected to be good, and so far it's delivering. We also had economic data this morning that helped the equity markets. US CPI and the New York Empire State Manufacturing Index basically support rate cuts. Both came in mild, and the Empire State Manufacturing Index especially came in lower at minus 12.6, or a negative number, so negative growth, versus expectation of a positive figure at 2.7. Last month was a positive figure as well. We saw it in the CME Fed Watch tool as the highest probability for the next 25 basis point rate cut from the US Fed moved from July back to June, where it was a week ago, and it had moved out to July. We also saw it in the double-digit drop in interest rates across the Treasury yield curve.